All right, guys and gals, back to work here this evening. It's about that time of day again here after all. It's Monday evening. It's May the 11th, 2020. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a great video in store for you guys and gals tonight. As you can see in the background, the charts are all ready to go. We get some oil, some S&P, and of course some gold on the video tonight. We're going to break the entire charts and make sure you know where the best setups be for tomorrow. And speaking of tomorrow, we get some big news tomorrow. We get some testimony going on. We get some big news. We'll check the calendar. I want to make sure you know when to be at your desk to make sure you capitalize on the best setups. So charts are ready. The calendar is ready. Get a busy week ahead of us, and I'm so excited to have you guys and gals back tonight on the video newsletter. Before we jump in, though, and get this party started, please make sure you subscribe to our YouTube channel. I don't want you to miss all the good stuff we publish every night. And don't forget, if you have any questions about anything we talk about tonight in the video, drop those questions in the comment section below. I'll make sure to check comments after we publish tonight. And how about a thumbs up tonight? If you guys tune in every evening, if you rely on this video newsletter, hit that thumbs up button for me. I always appreciate you guys showing the love every evening by hitting that thumbs up button. So, great to be back here with you guys and gals. Let's not waste any more valuable time to get this video started. Let's kick this thing off. Check the calendar for tomorrow. I want to make sure you know what the schedule looks like so we know what to be focused on and what to avoid on Tuesday's trading session. Jumping into Tuesday morning, tomorrow, of course, is the 12th day of the month of May. Got a busy week ahead of us. We get some big news, of course, tomorrow from the CPI report. We get my boy Jerome Powell speaking at 9 o'clock on Wednesday. Got some jobs on Thursday and a whole peppering of news coming at us on Friday. So quite a busy week here this week. Now, looking at tomorrow's trading session, what do we have on the schedule? Well, we can see right away we got that CPI number at 8:30 Eastern time. That, of course, one of the biggest news events of the day tomorrow. What they don't have on this calendar for tomorrow is that coronavirus testimony happening in the Senate. That'll happen tomorrow at 10 a.m. Eastern time, so be aware of that. That definitely might throw a bit of a curveball tomorrow around that 10 o'clock hour. We normally have some really great setups between 10:15 and 11 o'clock. We've seen a lot of them in that time block lately. So hopefully that testimony tomorrow on Capitol Hill at 10 a.m. Hopefully that doesn't disrupt us too badly, but definitely want to make sure you're at your desk tomorrow morning bright and early with us. 8:30 we have that news report coming out bright and early. Remember, that CPI number tomorrow, they're anticipating this might be the lowest ever recorded consumer price index as prices are collapsing here as demand collapses obviously because of the shutdown of this coronavirus. So everyone watching that CPI number tomorrow, how much will that 10 o'clock testimony slow us down? It's tough to tell at this point. I'll be right there with you guys tomorrow morning in the trade room to make sure we trade through it. And of course, right, if it gets sluggish, we'll trade around it as well. So big news tomorrow morning, 8:30 Eastern time. Then, of course, we can see Jerome Powell on Wednesday, jobs on Thursday, and retail sales on Friday. We'll talk more about the plan for these as we go later in the week. But tomorrow morning, though, don't forget, make sure you're with us tomorrow ahead of that CPI number. Get the charts all prepped up and get ready for that news breakout at 8:30 Eastern time. And speaking of being with us tomorrow, I'm going to put all the membership information for you in the description of this YouTube video. Down the description of the YouTube video, I'll put all the info you need to come out and join us and trade this strategy with us every morning at 8 o'clock Eastern time. It's easy to get in. You got to be a member. I'll put all the information down in the description. Follow that link. Get registered for tomorrow morning's trading session. So we know what the schedule looks like for tomorrow. Definitely want to be there early. We'll play it by ear as we go into that 10 o'clock block. Hopefully it doesn't slow us down too badly, though, because we have seen a lot of great setups in that 10 o'clock hour between 10:15 and 11 o'clock Eastern time. Let's keep this party rolling, though. How about some charts now? Got some oil, some S&P, and, of course, some gold on the video here tonight. Let's start first with that black gold, the Texas T, the crude oil futures. What do we know about the oil markets here this evening? We know know, first of all, it's a range-bound market. This is probably the most important clue we see on this chart right now. The market, of course, is ranging. It's balanced, bouncing around back and forth inside that range. What do we do in a range market? We buy low and we sell high, right? We sell above the range and we buy below the range. Now, that's the general plan for a range-bound market. My favorite way to trade these ranges is to look for failure patterns. For example, wait for the price to go up, wait for the buyers to buy the pullback and sell back into those right into that range. Wait for the market to go down, wait for the bears to try selling the pullback and buy right back up into the range. Buy low, sell high, and focus on failures. But there's one really important clue that I've got marked up on this chart right now, which might be the most important clue other than the fact that we are in a range market, and that is the lack of rotation. Now, if you remember, last Thursday night, the last time we worked together, we saw something similar on the S&P. And we talked about the fact that markets that are balanced like this, these range-bound markets, right? They're balanced markets. So the amount of the move that goes above the range is oftentimes equal to the amount of the move that goes below the range. So the point I'm trying to make right now is if this market starts to rise higher right now, there's a disconnect here. Something doesn't quite add up. Why did we break out going higher and not finish the rotation on the other side? This type of clue led to that big rally in Friday's trading session, and this might be seen as another big clue for a rally on oil. I think that, in addition to knowing it's a range, is really the most important information on this chart right now. We want to buy low, we want to sell high, but if this market starts to run higher here, something's wrong because it didn't finish off that full rotation, which really should, at the very least, we should be back down around that 24.37 and change area, which is that low, right, from last Thursday's big move down. So that's the meat and potatoes here on the oil. We're definitely range bound. I want to buy low, I want to sell high, but I'm worried about that lack of rotation. So the first things first here is what if what we're anticipating actually happens right now? What if this market starts to make a big run higher? There are a couple different patterns I want to be ready for, and I want you to be ready for as well. One of them is a 1, 2, 3 breakout. This is the most reliable one. It'll be a strong move up, a pullback to the moving average, but this time, unlike the buyers failing like they did the first time around today, right, the buyers will hold that pullback and jump off the moving average. If I can get this 1, 2, 3 breakout, as I call them, then what I can do is I can mark up that high, I can mark up that low, and I can get pretty aggressive now buying the low of that hidden channel. I call these 1, 2, 3 breakouts into hidden channel pullbacks. Now, like we saw last Friday morning on the S&P, it may not pull back. It may jump and just keep on going, right? Like we saw last Friday. Right? If we start seeing some really big runs, right? Some really big green candles, red candles get bought up, right? Big green candles, red candles get bought up. You know what I mean? If this thing really starts to rip, if the buyers start to buy every pullback, right? Buy every red candle, so to speak, we then look for, we call a 2-try trap pattern. Real strong move up. Here's the trick. Look for a shallow pullback. And usually the giveaway is it doesn't touch the moving average. Look for that higher high in price. Once you see that strong rip higher, that shallow pullback, that higher high, oh baby, now we know exactly where buyers are waiting. They're waiting for minimum will be a double bottom. I want to get that trap low. And keep in mind, you want to keep your eyes open on some hidden channels up there. Very, very common to be able to hook up those highs and bring it down to that low and get that hidden channel. Those are two really very highly possible setups here I'm watching as we go. Now, another option would be does the market finish off its rotation? This is a big part of this. If the market finishes off that rotation, again, I would imagine it's got to be at least, right? At least, very minimum, at least off of that 37 at this point. I would anticipate, though, they could go as low as that $24 a barrel area below that trading range. Now, pay attention here because this is a really small detail, but it's a very important detail. Usually the small stuff, the small details are really where the big profits are. Now, one scenario, if this thing opens up and runs lower here, this is going to be a lot of bearish momentum. So if I want to be a buyer on this, I'm going to want to use a relatively conservative reversal pattern. And what I'll use is I'll use what I call a nested failure pattern. And it goes like this. As we pull back to the moving average, the bears will try to sell it once. Then I look for a higher high. That will usually create a rising support trend line. And this now gives me the ability now to let the bears kind of wrap that rope right around their neck. They try a second time. Now, think about the scenario now. The bears got what they wanted, right? They accomplished their objective. They finished off their rotation. I want to be a buyer because I know it's a range, but I've got a lot of what? Momentum. And if you want to use a small stop loss, if you're a day trader like I am, and you want to use a small amount of risk, right, you've got to really time your entries properly. You can't be sloppy with your entries if you're trying to use small stops, right? You need a big stop if you're not going to time your entries well because it'll whip around without you. The bottom line, though, is with all of that momentum, we now know that sellers are going to have their stops sitting right above those highs. Think of what's happened here. The bears tried once, the bears tried twice, everybody's in. And now we know where their pain points are, right? Now we know where those bears wave the white flag. Uncle, right? We know if they break above that high, right? In this scenario, what I do is I'm looking for a nice, strong green candle here to buy the sucker now, going back up into that range. I call this a nested failure pattern. Again, this is assuming we make that strong run going lower. Now, what if we don't? What if we sit inside the range here for a while? Okay, now what happens? All of that momentum coming off the high is all mopped up, right? Like a dry sponge, right? Sucking up all that momentum. Think about that way. If we go sideways here now, and then we make a run lower, now is momentum as big of a concern? No, it's not. And now what I can do is I can use a straight up seller failure, make the different color here. I can wait for that strong move down. Well, it doesn't have to be strong, but wait for the completion of that move. Look to see those bears now coming in and getting short on the pullback, right? I always sort of go out and find like a new channel, right, to look for that. We'll talk more about that here as we get to the S&P. I'm going to talk more about that in the S&P here in a second. But now think about it, right? The bears come in, they try to sell off that pullback. We now know exactly where their stops are now. We don't have all of that momentum concern, and now I can be pretty aggressive buying into stop losses and, of course, right, buying on that pullback, right? So this, of course, is a seller failure into a bullish pullback going back up into the range. So at this point, range-bound market. I want to buy low. I want to sell high. But this momentum is a big, big clue. And the lack of that follow-through, the lack of that pendulum swing is a really big clue. Now, we've talked a lot about breakouts. We've talked about traps. We've talked about failures. We're going to obviously trade this stuff together tomorrow morning in our trade room, but I want to make sure if you're not with me tomorrow in the trade room, you have a deep dive into all of these patterns. What I'll do is I'll put a link for our free trading classes in the upper right-hand corner. If you're not going to be with me tomorrow in the trade room, that'd be the best place to be. We can do it together. Right? I'll give you all my cheat sheets and all my checklists. We'll do it together. If you're not with me tomorrow morning, the next best thing is grab that little pop-up link there and get registered for our free trading classes. because that way you can learn about failure patterns and nested failures and traps and breakouts and everything I'm talking about tonight on this video newsletter. So grab the free course. And again, don't forget, like I said earlier, I'll put all the information you need down in the description of this YouTube video as well. Now, we talked about the buy side. How can I be a seller now on this market? How can I sell this thing? Can we sell it as it goes lower? We definitely can, because if you zoom out here a little bit and the market, right, zoom out, we've got this big monster range down here, right around $20 a barrel there. So that is a very nice magnet for sellers. The problem is we're inside of our own range right now. So the only way I can confidently be a seller on this is to see these bears get basically the same signal we saw going higher, which is I want to see a strong move down. I want to see a pullback to the moving average, and they need to hold that pullback. Right? Give me that 1, 2, 3 breakout, but now for the bears, right? Just like the bulls need a 1, 2, 3 breakout going higher. But again, because the bulls are not getting that, because the bears didn't get that rotation, I can be a lot more aggressive being a buyer here if it starts ripping higher, because the clues are right there in front of us. But if they make this run lower here, I'm still thinking it's time to be a buyer, right, up into that range again. But if they can hold that pullback and jump, if we can get what we call a 1, 2, 3 breakout, same thing as a reversal, I can now mark up that low, I can mark up that high, and I can now look to sell off the high of that hidden channel. Where's my target? Down into that $21 a barrel area. And that should be a pretty nice move going lower, but they've got to hold that pullback. And again, I'm not trying to sell that first pullback. The first pullback's not going to be very reliable, right? The second pullback, though, will. Just like this first pullback going higher isn't very reliable. But if they were to hold that pullback and run it higher, oh yeah, now that is it's almost a must-take trade at that point, right? The first pullback is meant to be sold, right? The second pullback, you got to buy that, right? That is almost a must. It's almost a must-take trade, because if you don't, you're going to miss out on that opportunity. Now, I also think too that if the market can rally back up here again, remember, you got a bunch of resistance up top here, trendline overhead here. You know, if we sit inside the range like this, we poke our heads up again, right? I can easily short this. But again, I'm concerned about that lack of rotation. So an easy way, and again, this is if the market goes sideways here. Right? If this thing just rips higher, I'm not going to sell into it, because it's obvious that the bulls have more control than the bears right now. But if we sit, if we spend a couple hours here overnight inside that range, and then, tomorrow morning in London, early US, we see that spike higher now, okay, I'm in. I'm open-minded to sell in this market right now. And to do that, what would the best way to do if I was worried about that lack of rotation? If I was worried about momentum for the bulls right now, what do you think would be the best way to sell this? It'd be a failure pattern, but it'd be that nested failure, right? I'd wait for one try for the bulls. I'd wait for two try for the bulls. Again, I would draw that trend line down overhead. I'd be looking for that short right up around that trend line, going running back down into that into that trading range again. So make sure you remember, right? If we chop around, that absorbs a lot of the momentum. If we don't, it'll blast, right? It has the potential to really blast higher here. And again, we could really make a nice run up to that, it looks like, up to that 28 area high, right? We could easily find ourselves in and around that 27 and change, 28 and change area, I should say, up around those highs. So a very interesting chart here on the crude oil. It's another example. We've talked about this many times over the past couple of days. It's another example of what hasn't happened yet that is really the biggest clue as we go into tomorrow's trading session. All right, let's keep this party going. And again, you got to grab that free course, right? Grab that free trading course linked up in the upper right-hand corner. You'll be happy you did. Those setups I teach in the free trading course might just change the way you look at the financial markets. Next up, speaking of it's not what we didn't see, or not what we did see, it's what we didn't see, the S&P is a great example of that. But I'll tell you, the S&P was a bit of a brain buster here tonight. As you can see, it was an interesting day today on the S&P. You can probably see that right in front of you. It's a very interesting chart. First of all, what happened was today, I'm sure you know this already, but the market gapped up, right? Well, actually, sorry, gap down, excuse me. We had a weekend gap. The gap is at 30.5, and I put it right there because I'm not quite convinced it's necessary for tomorrow, but I do want to see where it goes for the rest of the week. I'll talk more about that in a moment, so kind of put a pin in that idea here for a moment. But you'll notice, though, we gapped down, we shot up, we shot down, and then we kind of grinded, right? We kind of grinded there on a faster time frame. This was a 1, 2, 3 reversal, and buyers were picking the bottoms on that before it rallied all the way higher. Now, if you watch this newsletter every evening, you know what I'm going to say right now. If the market is bearish like this and they fail, this thing will go almost instantly right back to retest its high, but it didn't. So something is wrong right away. That was the first thing I noticed when I came back from lunch, right, is I'm looking at the chart going, what the heck's going on right now? Why did this market make such a big, strong move down? It itself couldn't finish off that move. Remember, anytime you see a strong move like this, it's almost a guarantee they get that retest. And they blew it, right? The bears didn't get it. And then the bulls clearly grabbed control here. And I mean, this should have been easy. This should have been a layup. It should have gone right back up to retest the high. And it didn't. And it fell flat on its face. In fact, they got a beautiful pullback here, right, and didn't do anything more than retest the darn double top high. What the heck? So a lot of interesting clues here. What should have happened didn't happen. And in these situations, when I see a market revving its engine down, can't retest, revving its engine higher, can't, right, it's a range. It feels like a range. It smells like a range. And then I looked left. And I looked left a little bit, and I saw this bad boy right there, right? Sticking out like a good old sore thumb right there. And I thought, oh, that's it right there. That's the giveaway. That is the giveaway. That is the middle of the range. And look where we finished up the session. Bingo, right in the middle of that crazy, crazy range. Now, if that is legit, if that is really the middle of that range, then I should be able to draw a trend line down off that high, up off that low, and that should be right in the middle. And my goodness, I'll be darned, it's right smack in the middle. So now we are, I think ahead of the game now here on the S&P. This is a market, this is a chart that could easily take back a week's worth of gains before you realize this sucker's a darn range. And it really, I'm sure a lot of people looking at this, at first glance, I thought, maybe it's a range in the middle here, and it might be a range in the middle. You know, it'll probably end up kind of ironing out into a range here in the middle somewhere tomorrow. But it's a big, wide, and really tricky range here. Trending off the high, trending off the low. The giveaway is right there. It's when you see that prior high back here from last Friday, and you see where we finished off today. Bingo, that's your giveaway. So, what is a range market? It's a balanced market. What do we do in a range? We buy low, we sell high, we avoid the middle. That's why I have my no trade zones, right, and my battle zones on the chart. Now you can see why I'm not quite convinced that weekend gap is really that important for tomorrow. Normally, I would put that on there, and we'll talk more about that tomorrow night because it may end up with a range up here right around that gap. But right now, though, it's too difficult to put the gap as the focus. That 29, 23, I believe, has to be your focus here right now as the middle of that range. So for all the technical analysis nerds out there, right, like I consider myself to be one, I hope this is very satisfying for you. I do apologize for the lengthy overview on this, but I'll tell you, these are some of the toughest charts to analyze because it looks like a trend. It hasn't quite confirmed a range yet, but again, it's what didn't happen that I believe is the most important part of this. Okay, now that we know what we're dealing with right now, or we know what we think we're dealing with right now, what's the plan here right now? I want to buy low, I want to sell high, and avoid the middle. The biggest thing right now is I'm anticipating we're going to see another leg lower and a buy off that low. Remember, keep in mind, this is I would imagine a lot of people will get fooled by this pullback right now just because it's going to feel like a reversal, right? It's if you don't know where the range is right now. So what I'd love to get is I'd love to go right back down into that same little choppy area there and see if I can't get long off of that low and really try to benefit off that rotation back and forth, because that's what you're expecting in a range. You're expecting that range to bounce back and forth here as we go. So the first thing I want to do is I want to see if I can buy off of this low. And what I'd like to do is try to anticipate that's where this channel comes from. This channel's not just for kicks and giggles here. This channel is definitely for, well, it's to remind me that if we make a run lower here, what will happen is people will draw trend lines off these lows, off the highs, and they'll try to sell off of that high, right? That's what I hope we get, because then we'll have sellers just in a horrible position right there, and they'll be trapped, and we can buy right into those stop losses. So imagine now, right, we do get that strong move, or we get that pullback lower here. We start pulling back off of that low. I'm going to draw my trend line here. Moving average comes over, right? I'm going to draw my trend line now off of those lows, and again, this may not be exactly the same, but it'll be something similar to this, right? Off the high now, and that's where bears are going to want to hit it. And if they're successful, this will become it's a breakout. Then I'm wrong, and it's not a range. There might be some news overnight. Who knows? There's a lot of possibilities that could happen overnight that could break this thing out. But the reality is, right now, my goal is I want to see some bears coming in. I'll know exactly where their stops are, and I can buy right into those stop losses, right? So it's a seller failure pattern off the low of this range. It's a triangle, right? That's going to be hopefully my bread and butter there for tomorrow. Now, I would also say too, right, what about a breakout? It's very tempting right now to have this thing go up. It's a double top at the high. It's very tempting to want to look at this as a range right here and look at this as a straight up seller failure. But I'll tell you, I just don't trust it. I just don't trust it. If the bulls were this much in control, then why aren't they back at these highs right now? That's what's going through my mind right now. So I don't trust that seller failure down here right now. You might. That would be a valid seller failure pattern below those lows. It's the same idea as the other ones. I'm just waiting for the bears to get short, and I'm buying into their stops. I just don't trust this because I think you're going to be dealing with right in the middle of that range. I just don't trust it. What I'd like to see, though, is a strong move up, a pullback to the moving average, and a strong breakthrough. If you can show me a 1, 2, 3 breakout, again, they couldn't do it here. They couldn't do it there. But if they can prove, if they can show me some proof, right, that they've got what it takes to hold that pullback, okay, you convinced me. But I'm not going to jump into the first one. That's an unreliable trade. Right? What would you do? Would you trade a more reliable setup for some profit? I would all day long, right? Because money is on a transactional basis. If I can take higher winning percentages, I'll make a lot more money in the long run. I would rather trade a more reliable setup, right, than to get in earliest on that move. It's not even close. I'd much rather wait for that 1, 2, 3 breakout, mark up that high, mark up that low, and buy that next pullback. Right, because then everybody knows what's going on. It's a much more reliable setup. 1, 2, 3 breakout into hidden channel pullback. And where's my objective? That big high up there. That's where they're trying to go, right? 29.65 and a quarter. It looks like, and that might happen. We're listening in for more stimulus in the U.S., right? Who knows? There could be a lot of breakout news reports happen overnight, and the market easily jump like this. But for right now, though, I just can't stomach the idea of buying right here with that seller failure. Now, another thing I mentioned earlier is if we do end up going sideways, something like this. Right? If we do end up going sideways inside of that range, where else could I buy? I could buy with, this time now, I could use a seller failure. I can wait for the move lower. I can wait for those bears to try to sell short off the moving average, and I can buy right into those stop losses, right? It's a seller failure pattern below the low of the inside range around the edges of the bigger range. Okay, I know that's a little bit complicated. But once we start seeing the range develop inside, we can then start picking our shots, buying that low. Okay, now we covered the buy side. Okay, let's talk about the sell side now. Okay, first one, if we don't get any rotation, right? If we get rotation and then back up, I can be aggressive selling there. But if the market pops higher here, how do I sell this? Okay, remember, there's no rotation now. There's no rotation. We're not confirming it's a range any longer, right? Just like on oil. Remember how oil didn't rotate? Remember that from oil, right? Oil didn't have that rotation. It didn't finish off the rotation. What does that mean? It's a big bull clue. So if the market runs higher here right now, how do I sell that? Very carefully, because you're walking right into a trap. You're trying to sell into a strong bull and a very strong momentum move. So if I want to be a seller off the high, which is a great place to get short, I might add, it's just momentum's a pain in the butt right now. If I want to be a seller off the high, what do? Crown reversal. Crown reversal. 1 try for the bulls, 2 try for the bulls, trap high, and collapse back down again. Now, this is a very specific setup. I'm going to warn you right now, you've got to make sure you're doing these reversal patterns. First of all, you've always got to be at a major turning point, right? So major levels of resistance. We don't trade reversals unless we're at a major turning point, like the high of a range. Second thing is, remember, reversals are by definition much lower probability. If you're a brand new trader on a 1 contract account, I would stay away from reversals. Okay, you want to get the highest winning ratios possible when you're a new rookie trader on a small account, because you don't have the luxury of too much money to lose. So if you need to make your trades count for you, these types of reversals are definitely out of the question right now for you. All right, and I learned that lesson the hard way when I was a rookie. When I was a rookie, I made the critical mistake on a small account trying to trade all the patterns. Okay, once you get your account built up, then you'll have the flexibility. But when you get a small account, though, you got to go A-plus patterns. What's an A-plus pattern, by the way? You're going with momentum. You're buying at support, and you got a small risk, big reward opportunity. With momentum, buying at support, you can risk small to earn large, that type of setup. That's an A-plus setup. That's not an A-plus setup reversal. So just be aware of that. If you do have the account size, if you can take a couple losses and still breathe easily, then you want to go quarter size position on those reversals. These are not full size positions. These are not load the boat, bet the farm on, not reversals they aren't. All right. You want to load the boat and bet the farm, right? Grab the 1, 2, 3 reversal, get that momentum pumping, right? That is a trade, right? That is an A-plus setup. That is going with momentum at a reliable level of support and a great risk small to earn large opportunity, not a reversal. Okay. So now that I got that off my chest, if we do get that run higher without rotation, it's a 1, it's a 2, it's a trap, right? And go. And again, these types of patterns, right? Be careful as a rookie. They take a lot longer than you think they might. Okay, you're not going to get a full trend reversal in a 5-minute candle, right? You probably 15, 20 minutes to get that battleship to turn around. Now, if we do get rotation, right? We do go down, we get that failure, we're back up here, right? If we do get that rotation now, remember, this is a different game plan now. Now the range is confirmed. Now, if I do get that rotation, now I can be a lot more confident using buyer failure patterns to sell off the high of that channel. Again, at that point, we're already confirmed that range. I hope you can see the difference there. If you don't see the difference that rotation makes, drop some questions for me in the comments section below. Let me know, just say, quote, talk more about rotation. I don't understand rotation, and I'll talk more about that in the next time, right, on our newsletter. All right. Speaking of which, how am I doing so far? This is tough stuff, right? This is not easy stuff, this S&P. If you're keeping up with it, if you're loving this stuff so far, how about a thumbs up button for me? And I want you to make sure you subscribe to the YouTube channel, and don't forget to share this information with a friend. So now we know what we're looking for here, right, if we have good rotation. Now, keep in mind too, if the market makes a run lower and we see a strong jump off that moving average now, all of that momentum, mark the high, mark the low, and we're selling off the high of that channel, right? So again, as long as I can get a significant breakout of that range, I know exactly where I want to be selling short from there. All right, guys, I think we're looking pretty good here. Got the buy side covered, got the sell side covered. Remember, it's all about what happens. Do they finish off rotation or not? And again, drop those questions, all those comments, right in the comment section below, and I'll make sure to hit them up after we finish up here tonight. This will be a very interesting scenario for tomorrow morning's trade room. I'm excited to see you guys with me there at 8 o'clock Eastern time. Last but not least, though, here, how about some gold? The yellow metal, let's see what's going on the GC here. What do we know about gold tonight? First of all, we know the market is bearish. That, I think, is relatively easy to see. And there's a range in here. Now, there's a lot of ranges on gold right now. This is pretty interesting, though. A bear move down, right? Double bottoms, double tops. We slam lower. We go back into the range again. That's the giveaway. It's a range. And then back down again. Okay? It's bearish, but we got that range. Almost, again, think of a range as a balanced area. It's a magnet, right? Think of that range as a magnet. So that's where the market wants to go, right back up into that trading range. Now, I should also mention too, just for knowledge at this point, if you zoom out a bit here on the gold, we are basically inside of one big trading range here, right? That's all this is. It's one big range. So just be very careful chasing the market higher or chasing the market lower. If the market runs lower here, you've got to be very quick on that 1, 2, 3 breakout. But after that, sit on hands. Because what we're seeing for example, strong 1, 2, 3 breakouts. You'll get that short, but you don't want to be chasing after it, right? You'll get that initial short, but you don't want to be chasing after moves here on the gold because it's obviously one big trading range, right? That means, yes, I can look for shorts on the way down, but I don't want to be selling down here, right? I can look for longs on the way up, but I do not want to be buying way up there, right? You got to think about that. That's going to be the most difficult part right now on gold, is that breakouts, you've got to wait for the confirmation, get in, and then sit on hands. It's going to be a very short leash here on this market, at least until we can break free of this trading range environment on the yellow metal. And it makes sense. The market's kind of in turmoil right now because of the spread of the coronavirus, more stimulus packages. Everybody's worried about the second wave coming in the next few weeks here. So it's easy to see why gold might be a little bit nervous right here the next couple of days here. Not to mention, we got Powell coming out on Wednesday, CPI tomorrow. Gold's going to be a little bit jittery here in the next probably 72 to 96 hours. So the most important thing is it's a range, buy low, sell high, but we're very bearish. Remember, you've got to look at this range through the lens of a bear market. Range, the first clue is the range, buy low, sell high, but it's a bear momentum that tells me if I am going to buy low, do it the conservative way, do it the safe way. Now, let's talk about that, right? If you wanted to be a buyer on this market right now, what type of pattern would you look for to buy in a bear market? We just talked about this one, right? I just went on my soapbox there for a moment and said, don't take this trade, right? If you're on a small account, we're seeing one right now. So as we go lower, see what's happening now? I've got to pull back to the moving average, 1 try. We go up, 2 try. What's that look like? That's a crown reversal. Now, are we at a major turning point in the market? Am I at a major level of support, right? I'm underneath that range. I think I am. Do I have the ability now to risk small, to earn large? I do think so. Now, I do wonder if you're going to see some folks looking at this as a hidden channel up here, right? So be very careful chasing after it. We'll talk about that in a moment. And I think that absorbs that problem. So as we go lower here, bears try once, bears try twice, and you can see technically they've tried a couple times, 1, 2, right? But I want to get down inside of this battle zone, as I call it, right, for a crown reversal pattern, right? That crown reversal, that's the way I like to trade against a trend when I think I've got a good shot of going back in the direction. Right? Remember, your odds will not be as high on this, so please be careful if you're on a smaller trade account, right? Because it's definitely going to be a lower probability trade. Now, what would be a higher probability trade to be a buyer right now? A strong move up, A pullback to the moving average. Okay. What else? A break higher, right? A break higher. Now remember, you're going to want to be aggressive on this one, right? I'm not going to grab the first one. I'm going to wait for, and this, keep in mind, guys, this is not drawn to scale. This could be go up, pull back, and jump from there, right? So all that matters is we see the buyers come in and give it a good whooping right there. Again, look, they tried back here. They go up. That's a strong move. That's a pullback, but they never exceeded the right. They never blasted higher, okay? Those get sold. If they don't succeed, they'll get sold by professional sellers. If the bears fail to hold that and the bulls are successful, I can mark the high, I can mark the low, and I can get pretty aggressive on that first pullback. Well, technically it's a second pullback. It's the first pullback though, once we know we have that 1, 2, 3 breakout. But remember what I said earlier, right? Up here though, it starts to get too high, right? Gotta remember that. It's one big range. All right, that's why I pointed that out earlier. Okay, you'll get a reliable entry off that 1, 2, 3 breakout, but be very careful looking for the second, third from there because again, you've got that big old range up there. Now there is also potential. We may really race higher here, right? Again, we talked about this earlier on crude, right? If the market really rips higher on this and it races higher now, think about it this way. Shallow pullback. Let's get rid of this text here real quick so it cleans things up here for us. You already know what we're looking for. So strong move higher now, right? Real strong here. In fact, I would say probably got to be at least above that trend line overhead. If they can get through that trend line overhead, see a shallow pullback. Remember, this is the giveaway, right? Shallow pullback, higher high, strong move up, shallow pullback, higher high, trap low. I love that setup. The 2-try, right? That 2-try setup there. Mark up that high, mark up that low, find me some hidden channels. A very reliable, again, got to start off with a rip higher, right? I don't want this setup inside the range. Okay, that's not what I'm looking for. It's going to be a very strong run higher. If not, wait for that pullback, 1, 2, 3 reversal, right? And buy the low of that channel from there. All right, so those are the key setups here right now to be a buyer, right? Trap low, 1, 2, 3 reversal, right? Or 2-try trap as we go. And again, don't forget, guys, I'm just simply drawing the chart right now. If you're serious about your trading success, grab that free trading course linked up in the upper right-hand corner or come out and trade it with us tomorrow at the opening bell at 8 o'clock Eastern time. All right, how do I sell this market? Well, first of all, right, we know once again, if the market makes a run lower, right? Strong move down, pull back to the moving average, strong breakthrough. That's a 1, 2, 3 breakout. I can mark up that low, mark up that high, and I will definitely be looking to sell off that first pullback. However, once we get down to these lows, though, all bets are off. At that point now, it's too low, right, to be chasing after that move because, again, it's just one big trading range. So get to it quick, not too quickly, right? I'm not saying sell that first pullback. I'm saying get to it quickly, but be aware of your surroundings, okay? 1, 2, 3 breakout pattern is what I'm referring to here now. Now, if we do go back up into that range, let's say, for example, we go back into that range right now, okay? How can I sell that now? Buyer failures. If we go back into the range and we start getting that momentum zapped and it goes sideways here, now get the pop up, buyers come in, they try to buy the pullback. Again, at this point now, that momentum has been absorbed and I can now sell right into those stop losses again, right? I can wait for that pop up. I can wait for those buyers to try to buy the pullback and put my order right below that low to sell into those buyers' stop losses, right? Makes sense? Now, what if we just rotate higher though? What then? I can't be that aggressive. If the market runs higher, remember, now you've got all that bullish momentum now. What's the best way to counteract that bullish momentum? Yes, good job, nested. 1, 2, again, I'll draw the trend line. If they can get that trap high, it becomes a crown reversal. Boy, that'd be even better, right? But the bottom line, though, is just like we talked about on, I think it was oil, if the market goes up and sits sideways right there, it absorbs momentum. So as it goes higher, what can I do? I can be relatively aggressive. Buyer failure, sell back down in. But if the market takes off to the upside now and I want to be a seller, I can't do that, right? Now that momentum coming off of that low is just too strong. And so if it runs higher here, right, we got some resistance levels overhead, top of that hidden channel there. Now what I'll do is moving average comes over, buyers try once, buyers try twice. Again, one try, two try. Because momentum is a factor, I draw my trend line, and I'm simply using that trend line now, right, as that key level of resistance. All right, we call those nested failure patterns, right? Basically a nested buyer failure off of that high. Man, oh man, we are looking great for tomorrow. There's a lot of head fakes, though. There's a lot of curveballs on these charts right now. I think the range is the most important thing right now in the gold. Remember, get to it early. Not too early, right? But get to it early enough so you're not chasing these breakouts. And be aware of that trap there. I like that trap around 1695 area there on the gold. Now all we need is these markets to open up in Asia. I'm excited for tomorrow morning's trading session. But most importantly, come out and trade it with me tomorrow. I'll put all the membership information for you guys and gals in the description of this YouTube video. Once again, go right in the description of the YouTube video. Grab the membership links there. Get registered for tomorrow morning's trading session. Don't forget, if you're on the website right now at sidewaysmarkets.com, all the info is linked up below this video tonight on the trading blog. Please don't be afraid to call that toll-free phone number. I'm always here available to talk to you guys, so call me in the office if you have any questions. If the telephone isn't a good fit, use that live support tool. I'm always checking that chat as well. And as always, guys, if I don't see you guys tomorrow morning and every morning in the trade room, 8 o'clock Eastern time, at the very least, make sure you grab our free trading classes as part of our free trial. You'll love the trading strategy. I give you hundreds of examples of how we apply our favorite setups to our favorite futures markets. Everybody loves it. I think you will as well. So grab that free trial if you haven't done so already. All right, guys, wrapping things up here tonight. Hope you had a fantastic weekend. A happy Mother's Day to all the moms out there. Hope you guys had a great weekend. Time to wrap things up for tonight, though. I'll be back tomorrow morning in the trade room. If not, we'll see you guys tomorrow night, same time, same place, on the next edition of this nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.